This feels to me like one of those Warren Buffett moments when the tide goes out, you see who's wearing swimming trunks and who's naked. And I think we're going to see that in our industry in the next 2 or 3 years.
The Ryanair share price is seeing a bit of a resurgence in 2023. At the time of recording, the share price is up 32% and the share price is sitting at $98. The airline industry as a whole has gone through hell and back, through all different types of crises and challenges, and that is reflected in the longer term price chart here. If we look back over the last 5 years, we can see that the share price of Ryanair has gone through lots of different peaks and troughs as it deals with all of these challenges. Some of Ryanair's closest competitors have also seen a strong start to 2023, with Lufthansa up 24% and EasyJet up 48%. In today's video, we're going to be taking a closer look at Ryanair and some of, I suppose, the challenges and opportunities that it has coming up in the next couple of years, and whether it could possibly be a good one to add to your bag. But as always, make sure and take none of this as financial advice. It is just purely to help you along the way with your stock research. The airline industry has probably gone through some of the toughest times in its history over the last couple of years. It's had to deal with things such as COVID, the rapid rise in the price of oil, which has a knock-on effect on jet fuel. It's had to deal with mass cancellations of flights due to things like war, air traffic controller strikes, and COVID. And all of that has really put a strain on company resources, especially cash flow and liquidity. Only the most resilient airlines have been able to survive this. And the stats are still not really great because we're still not even back up to pre-COVID levels. The daily airline traffic stats show that at the end of April there, we were still 7% behind what the levels were in 2019. But this has not stopped Ryanair hitting its targets whatsoever.
We've done very well. We're the only big airline in Europe that's operating at high above pre-COVID capacity. We've restored profitability to COVID levels, which enables us in December to restore the payroll or the agreed payroll cuts for about 90% of the pilots and the cabin crew, which we're very proud of.
And also Ryanair have been able to take advantage of a number of other operators going out of business, such as Flybe. This has resulted in Ryanair increasing its market share in the EU compared to their pre-COVID levels. So they're up 112% of their pre-COVID capacity in the first 9 months of their 2023 financial year, which ends in March 2023. Their most notable gains were in Italy, Poland, Ireland and Spain. What's very interesting is Michael O'Leary's vision for how the airline industry in the EU is going to play out over the next couple of years, which from his comments, I think he believes that Ryanair are going to become the leading and sole dominant low-cost airline provider in Europe.
I would say there's a risk opportunity that is different this time because so much capacity was taken out during COVID. You've seen airlines, Thomas Cook, Flybe gone bust. Alitalia have taken out 50% capacity. It's not coming back. TAP have taken out about 40% of their capacity. EasyJet, Wizz and others are still not operating back at their pre-COVID volume. So this feels slightly different. And then I think the real overhang here for the next 2 or 3 years is going to be much higher financing costs. You know, the days of cheap money are over. You know, this feels to me like one of those Warren Buffett moments when the tide goes out, you see who's wearing swimming trunks and who's naked. And I think we're going to see that in our industry in the next 2 or 3 years. Already the legacies are talking about more M&A, TAP as a target, Alitalia as a target. I think we're going to see in the next 4 or 5 years, but I've been saying it for 10 years now, the final consolidation when Europe moves towards 4 large airlines, 3 big connecting carriers and 1 large low-cost carrier.
Now Ryanair doesn't exist in a bubble, it's heavily affected by market conditions, and we are in times where inflation is hitting everybody's pockets really hard. And the long-term effect of high interest rates could inevitably throw most economies into some sort of recession in the coming years. But Michael O'Leary is still quite bullish given this.
It looks very strong, and I think what's unusual this time around is that people are still employed. There's still a lot of job vacancies. People are still spending, but they're spending on, I think, food and travel and energy.
And you know what? I tend to agree with him here. For anybody who can afford to travel at the moment, they're not really afraid to actually spend that money because travelling has become a bit more of a necessity rather than a luxury over the last year, given that we were cooped up for so long during COVID. And as well as that, the price of staycations in countries such as Ireland, where I am from, have become incredibly expensive, and people are able to find much better value by hopping on a plane and going somewhere else. What's really promising to see from a Ryanair perspective is that they really are doubling down in terms of investing in their fleet. So they are going to be in a great position to take advantage of any carriers that go to the wall and take up their capacity. And as well as this, their newer fleet have an additional couple of seats and are more energy efficient, which should help increase their margins. Here is what the Ryanair fleet looks like at the moment. So overall, they're investing $22 billion in 210 new Boeing 737-8200, which they are calling the game changer because they have 4% more seats, and as I said, they are going to be more fuel efficient. They should lead to 16% less fuel burn and 40% less noise emissions. So at the end of 2022, they had about 84 of these 210 new planes actually received and delivered, and that is going to be up to around 124 by the summer season of 2023. So in summer of 2023, they will have half of these game changers in operation, all going well, but they are really heavily reliant on whatever Boeing is doing. Pretty much all of Ryanair's fleet is Boeing, apart from a couple of Airbuses that they have. They really are heavily dependent on what Boeing can do in terms of delivery, and there has already been some news of potential delays on those deliveries that could potentially affect 24 of their new jets. Arguably, this is a bit of a weakness for Ryanair, but there's not much they can do about it because Boeing is such a dominant player. I think they have over like 65% of the market in terms of single aisle jets. In terms of looking at Ryanair from an investment perspective, the key area that you really need to focus on is their balance sheet at the moment. They do have a considerable amount of debt on their balance sheet of $5.03 billion at the end of 2022, and this is obviously because of their heavy capital investments. Overall, they have a net debt position of about $960 million, but their target is to bring that net debt position down to zero by April 2024. So the real focus for Ryanair over the next year is to generate enough free cash flow just to be able to pay down as much of their debt as possible.
I think our shareholders are we've rebuilt cash flow. We've a very strong balance sheet. We're sitting on about $4.5 billion of cash at the moment, but in the next 12 months we have $1.5 billion of bonds that we're going to repay. We're not going to refinance them. We're going to pay them down, and then we've about $2 billion in gross capex. We'll take delivery of about another 51 aircraft from Boeing if Boeing can deliver them on time. So we're at peak capex at the moment, but I think our focus will be, rather than distributions to shareholders, will be pay down debt. We closed the year in March at $1.5 billion of net debt. At the end of September, that's down to $500 million of net debt. So we're determined to go. We're going back to zero net debt in April of next year.
Historically, Ryanair have been excellent at managing their cash. Anybody who was trying to get a refund from Ryanair during COVID for a cancelled flight will know that they had to wait for possibly over a year just to get a refund. Ryanair are really cute, and they will use every trick in the book to try and preserve their cash flows, even if it's at the expense of a few pissed off customers. In terms of whether I think Ryanair is over or undervalued at the moment, I did a discounted cash flow analysis just to see what number it pumps out at the moment, and I was able to work out what their weighted average cost of capital was and put in a terminal growth rate close to kind of long-term inflation and a conservative enough estimate of their free cash flow growth over the next 10 years of 5% based on their free cash flow over the past 12 months trailing, which was also around 1.2 billion. That gives us an estimated intrinsic value of 98.34 for the Ryanair share price, which is only marginally ahead of what the actual share price is at the moment. It's only like 0.4% ahead of the share price as I'm making it right now, which is $97.99. But always take the results of a discounted cash flow calculation with a pinch of salt, because there's a lot of assumptions that go into this. The current consensus among 20 analysts polled was that Ryanair was a buy at the moment, and that gave a median share price target of $125. So that would be a 28% increase from where it is at the moment. These analysts can be way off the mark a lot of the time, and what goes on with the share price is kind of heavily dependent on what with like interest rates and in terms of consumer spending and all these kind of factors. There is an unlimited amount of factors that can affect the share price, so make sure and do a wide enough analysis and just don't focus on Ryanair without considering everything else. What will be very interesting to see is the results that they put forward in the next couple of weeks now that will give their financial year ended 31 March 2023, their final results for the year. They already upgraded their guidance on the 4th of January for their profit after tax for the financial year ended 31 March 2023, they're expecting now between 1.3 to 1.4 billion profit after tax. This upgrade to their guidance, as well as a possible peak in interest rates coming soon, has really driven the share price growth that we have seen year to date. So I would expect a lot of volatility in around whenever they announce their next earnings. Depending on what the results of those are going to be, we could see the share price rocket again a bit more, or else we could see it fall back a bit further.